This video is about what is Bitcoin actually worth. I see comments like this all the time, like it's some kind of giant mic drop. Bitcoin isn't worth anything. It's just worth whatever someone else will pay you for it. And every time I hear it, I chuckle because congratulations, you just described how literally everything on earth is valued. Gold, what someone else will pay for it. A house? Yeah, you can appraise it, Zillow it, guess with a realtor, guess with a bank, but the price is whatever a buyer is willing to pay. A Rolex, a share of Apple stock, a Big Mac, same thing. That's called a market. It's not a bug, it's the whole point. And somehow, people think this is a criticism of Bitcoin specifically. If this breaks your brain, maybe you shouldn't be talking about money, because the value of it being what someone else will pay you for it is not some kind of fatal flaw. That's how value works. It's how price is discovered. It's how markets operate. And ironically, Bitcoin might be the purest example of that we've ever seen and that we have currently today. It trades 24/7 globally with no CEO, no marketing team, and no one setting the price. Just supply, demand, and a free market with perfect liquidity. So yeah, Bitcoin is worth what someone else will pay you for it. Same as literally everything else in your life. If you're still wondering what I mean by that, don't worry, because I'm going to break it down even further. But first, real quick, my name is John for my favorite thing about Bitcoin. I've been studying Bitcoin for several years. I created this channel with the goal of helping other people better understand and grow their conviction in Bitcoin. If that sounds like something you might be interested in, hit the subscribe button. All right, back to the video. So I'm going to break down the confusion a little further that people have when they say a comment like that. When someone says Bitcoin is only worth what someone else will pay you for it, what they're really implying is they don't think there's any intrinsic value. But here's the secret that no one tells you in Econ 101. There's no such thing as intrinsic value. Value is not objective. It's not fixed. It's not handed down by God. Value is subjective. Oxygen is arguably the most valuable thing on earth for all living things that want to continue to be living. But it's so abundant that I breathe it for free all day long. But if I didn't have any readily available, I'd trade all my net worth for it. Or what is water worth? In a grocery store, maybe it's worth $1. But if you're lost in the desert and dying of thirst, the same bottle becomes priceless. The water didn't change, the context did. Your needs did. The supply of it and the demand of it did. That's what economic value is. It's driven by supply and demand. For something to have economic value, it must be both scarce and desirable. It's what something is worth to someone in some situation, not in a vacuum, but based on how much they desire that thing and how scarce or abundant the supply of it is. Gold is another perfect example because people love to say, but at least gold has intrinsic value. It's used in electronics and jewelry. Yes, gold is used in industry. Gold is used in electronics. Gold is used for jewelry. But do you want to know what percentage of gold's market cap comes from industrial use? It's tiny. It's probably 6 to 7%. The vast majority of gold's $22 trillion valuation is driven by monetary premium. That means belief in its role as a store of value, an investment vehicle, a reserve asset. Market demand for it because of its utility as money, because people believe it can store its value into the future. Because gold is scarce, it's durable, it's globally recognized, and it has a set of monetary properties that make people want to hold it. Does that sound familiar to you at all? You don't need to eat gold. You don't need to live in gold. You don't need to use it like you use a house. It's valuable because people believe it will hold its value into the future. That's not a flaw. That's the definition of a store of value. So when someone says Bitcoin has no intrinsic value, what they're really doing is revealing that they don't understand what value even is. Industrial uses or uses in electronics or jewelry does not mean intrinsic value. You could call those practical value. And here's where things really fall apart for the no intrinsic value crowd. The truth is, nothing has some magical preordained value. All prices are discovered. Let's take a house, like I mentioned earlier. You want to know what your house is worth? You could hire an appraiser. They'll make an estimate based on comps, location, condition. You can ask a real estate agent. They'll ballpark a price that might work in your neighborhood. But at the end of the day, the only way to find out the actual price of your house is to put it on the market and sell it. You take it to the market, buyers make offers, and the highest bidder whose offer gets accepted determines the value. And that value gets used as a comp for the next seller. That's price discovery. And it's the same for everything. Art, stocks, baseball cards, real estate, Rolexes, gold, you name it. None of those things come with a true value sticker on them. They're worth what someone else is willing to pay for them, period. And guess what? Those prices fluctuate every day because beliefs change, markets change, context shifts. You think stocks have some stable, reliable valuation model? Have you seen how companies with zero profits trade at $20 billion valuations based on vibes and venture capital press releases? The S&P moves on expectations. It moves on narrative, appetite for risk, fear and greed. You don't call that a flaw. You just say that's how markets work. So saying Bitcoin is only worth what someone else will pay is just repeating the basic mechanics of price discovery. You're not debunking anything. You're not dunking on anybody. You're just describing how a market works. And it gets even more ridiculous because the people who often say Bitcoin is just speculation or it doesn't have any real value, those people often hold stocks or recommend that you buy stocks as an investment asset, right? Stocks trade on a closed schedule in a highly regulated market that you could argue is routinely manipulated by regulators, central banks, and insiders. Meanwhile, Bitcoin trades 24/7 globally, permissionlessly, with high liquidity, no central authority setting the price, no backroom bailouts when it crashes. There's no CEO doing an earnings call. There's no bailouts from the Fed backstopping liquidity. There's no senators trading on insider information. And there's no corporate board buying back stock to juice earnings per share. Just pure raw supply and demand, which means that the Bitcoin price is probably more accurate, more honest, more reflective of true market sentiment than almost anything in finance. And yeah, it can be volatile, but that's what real price discovery looks like, especially for a fixed supply asset that's still in its monetization phase. Gold was volatile too until it stabilized as a widely accepted store of value. Same with oil, same with basically every other major commodity. Volatility isn't some fatal flaw. It's what happens when the market is trying to find out the right price. So let's be real. If you believe in free markets, if you believe price should be set by millions of independent participants without manipulation, then Bitcoin is the most free market asset on the planet. It doesn't rely on trust. It doesn't need a quarterly report. It doesn't ask permission. It just trades every second everywhere. They're also very fond of saying Bitcoin is just speculation. Actually just made a video about a financial advisor who said that. It's right here if you want to watch it. But that's another one that makes no sense to me. Because if you really peel back the onion, you realize everything is speculation. Just because you can apply a valuation model or discounted cash flow model to something doesn't mean you're not speculating on it. Real estate, you're speculating you'll be able to rent it out. You're speculating the price will keep going up. You can buy stock in a productive company like Tesla. Well, you're speculating that Tesla will continue to support a PE ratio greater than 100. If Bitcoin is just a speculative asset, do you want to know what you're speculating on? You're speculating on the fact that monetary history repeats itself and hard money wins. Bitcoin is the best money that's ever existed. And when a harder money comes up against a weaker money, it sucks the value and the liquidity out of the weaker money. That's the story of monetary history. And speculating on Bitcoin's future is speculating on that pattern repeating itself. If you want to understand more about that argument, you can watch this video right here. So by now, it should be obvious. It's only worth what someone else will pay for it. Isn't a flaw. It's just how value works. Remember, economic value comes from supply and demand, scarcity, and desirability. So that begs the next question. Why do people choose to store value in Bitcoin? Because that's what this is really about. That's what people who say it's only worth what someone else will pay for it really don't understand. People aren't just buying Bitcoin for fun. They're storing their wealth in it. Why are they doing that? Bitcoin has a very specific set of monetary properties that make it uniquely suited to that role. Bitcoin is scarce, a fixed supply of 21 million, no dilution, no printing. It's portable. You can move millions across the world in minutes. It's verifiable. There's no fake coins. There's no counterfeits. The math doesn't lie. It's censorship resistant. No bank, no government, no third party can stop a transaction. And it's global. It doesn't care where you're from, what you earn, or what your passport says. That's why people are willing to hold it. That's why it commands a price, not because a government said so, not because it has some industrial use, not because it pays a dividend. Because the market, which means millions of participants across every country, every income bracket, every ideology, have collectively discovered that Bitcoin is useful. It's useful as money. That's its utility. Not because you can eat it or wear it or melt it down for electronics, but because you can trust it to store value and move money in a way that nothing else can. That's why people are paying for it, exchanging their hard-earned fiat dollars for it. So just for fun, Let's steel man a few more common objections that I hear a lot about Bitcoin. Objection number one, Bitcoin has no cash flow. You can't value it like a stock. So how do I know what it's worth? That's true. You can't use a discounted cash flow model. But guess what? A discounted cash flow model is just an estimate based on projected cash flows, which are guesses about the future. The model might help frame your thesis, but the final price still comes down to what someone else will pay for it. And if cash flow is the litmus test for value, then gold must be worthless and fine art must be worthless, and so must land or any piece of luxury real estate that you're not renting out. Objection number two, at least real estate produces utility. You can live in it or you can rent it out. Yeah, that's part of what gives real estate its value, but you still have to find a buyer for it. Plenty of homes sit on the market for months. The utility doesn't guarantee some floor price. The market decides. Bitcoin's utility is different. It's monetary utility. It's the ability to store value, move it across borders, protect it from seizure, and access a censorship-resistant monetary system. That's not less useful than being able to live in something or eat something. It's just not what most people were taught to think of as useful or as an investment asset. But if you live in Argentina or Turkey or Lebanon or even Canada during a bank freeze, that kind of utility could be life-saving. So yes, Bitcoin is only worth what someone else will pay for it. Just like gold, just like a house, just like your favorite stock, just like the art on your wall or the shoes on your feet. That's not a reason to dismiss it. That's the reason that it works. Because price discovery is the heartbeat of every free market. And Bitcoin might just be the most open, transparent, permissionless market we've ever seen. So if you still think it's only worth what someone else will pay for it is a flaw, then maybe the thing you don't understand isn't Bitcoin, it's how value actually works. If you're still watching, you stayed this long, it means it's probably struck a chord with you. So do me a favor, hit like on the video if you learned something. Comment if you heard that argument before, Bitcoin's only worth what someone else will pay for it. Share this with the next person who says Bitcoin's just a speculative asset. And if you think you're too late to Bitcoin and you've already missed the boat, I want you to watch this video right here where you find out how early you really actually are, because you never want to forget the most important thing, Bitcoin is inevitable.